Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 24th through February 28th. We're in part one of our weekly trading game plan. We'll try to help you make money trading ETFs. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of February 24th through February 28th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies and trade ideas for this trading week. And you can find a direct link to this Google document in the description box below. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can find and refer back to the notes for this week as well as previous weekly trading game plan notes documents. And you can also find a direct link to this publicly accessible Google Drive folder in the description box below. Welcome Fairchild, MD, Gerald Fitz. Hope you all had a great trading week and are doing well. So firstly, we'll take a quick look at how the markets ended up on Friday, and then we'll do a breakdown of the major indices, the technology components, etc. So if we go to the main page in FinViz, we can see the market's in pretty steep decline, pretty significant correction on Friday. So we had the Dow down almost 1.7%, NASDAQ down 2.2%, S&P down about 1.7%. Had 76% decliners, only 21% advancing. Had 43% new highs, 57% new lows. Got about a 50-50 split above and below the 50-day moving average, but we still got 55% above the 200-day moving average, only 45% below. And although this is showing bullish, it was a pretty bearish day, pretty significant correction. See, the Mag 7 took the brunt of the hit, so the bright reds, a lot of the Mag 7s. Walmart had disappointing earnings, so it was the loser in the consumer consumer defensive segment. Almost all these sectors are pretty bright red, with the exception of the defensive sectors, utilities, some healthcare, although UNH was a big loser from Friday. Welcome, Sydney Osborne, Nug M. Thank you for joining us. Hope you had a great trading week and are doing well. Look at some of the news. So we've got Buffett's letter coming out, so you might want to take a look at that. Always interesting. Wall Street ends sharply lower on mounting concerns over economy and tariffs. We'll look at some of the economic data that may have contributed to those concerns. Dow wipes out its gains since Trump's inauguration as stagflation fears return. Dow ends lower. United Health stock slide. Dow dropped 700 points. Worst day of 2025. New fears about economic growth. Traders hit risk off. So again, there's a very defensive move, very risk off day on Friday. Welcome to Crow. Thank you for joining us. Hope you had a great trading week and are doing well. We see oil corrected back down to 70, so it's got pretty stiff support at 70. We'll see if that 70 holds or if it breaks down further. Natural gas, again, been on a long-term upward trend, a lot of volatility. It's testing that 450 resistance level, got support about 425. Gold's testing the 2950 resistance level. If that breaks, might go for a test of 3000. See all the major indices steeply, the futures steeply declining, with the Russell being the weakest. Bitcoin's been bouncing around between about 95 and 100,000, so it's now down below 100,000. That resistance point got support at 95. See all the bond yields retrace significantly on Friday. So the 30-year back down below 4.7 at 4.66, 10-year down below 4.5 at 4.42, 5-year down to 4.25. So we saw bond prices recover, bond yields retrace. We look at a quick breakdown of the major indices and then the technology components. And just a quick reminder, you can access these screeners via the links in our notes and also in the screener sheets of our ETFs and our watch list Google Sheets. So we see the Dow, major correction from that double top, broke down below its 50-day moving average, still above the lower trend line. But again, now that 50-day moving average provides resistance, so some more downside on the Dow to that lower trend line. IWM, again, weakest, biggest decline, broke down below its lower trend line, broke down below its 200-day moving average, and more potential downside on Russell as well. So on all of these indices, we'll see the last low as they rolled over was early 2025. So we'll see if they go back down to test those early 2025 lows. SPY held up a little bit better. It's got support from its 50-day moving average after it made a new all-time high. So probably more support in the broader SPY. NASDAQ, you can see it went right down to that lower trend line, right down to its 50-day moving average. Probably get some support there. If those break down, we'll see if we get a test of the early 2025 lows. We look at a breakdown of the technology components. Again, technology took a big hit on Friday. We'll see ARK, dramatic retracement, dramatic correction after making a recent new 52-week high, broke down to its lower trend line below its 50-day moving average, might get some support from that 50-day moving average. That lower trend line had been, in my humble opinion, a little bit irrationally strong as of late. And you see that major correction. So again, congratulations to any of our BeachBum traders who took advantage of our trade idea, shorting ARK-K with the SARK ETF. So again, one of our ways to make money trading ETFs. These are the leverage longs. And then we also have the shorts in our ETFs Google sheet. So see an irrational move like that on the long, you can find an ETF to short it, in this case SARK on the ARK-K. The FANGs held up a little bit better, but we can see they also broke down below their 50-day moving average, down below their lower trend line. Got resistance from that multiple top, so pretty strong resistance. And breaking down below support. So again, we'll see if the FANG stocks go and retest their early 2025 low. Semiconductors did have a little bit of a bounce up off that multiple bottom. Went and broke one descending upper trend line. Looks like it tested the upper descending trend line and then retrace. So we'll probably come back down to that multiple bottom. Again, we'll talk about, we've got NVIDIA earnings coming up. If they disappoint, be very negative for semiconductors. If they beat and raise as their tendency is, we'll probably get a pop in semiconductors. TQQQ is just the leverage long on the NASDAQ, the short being SQQQ. So similar behavior to the overall NASDAQ. In the broad technology, we see it just broke above that upper trend line, strong correction back down below its 50-day, got support from its 200-day, but still some more potential downside to that lower trend line and the early February low. So again, more potential downside in the broader technology sector. In the short on the broad technology, this is the long TECL, the short is TECS. Full disclosure, we're still long TECS, so we're already a short broad technology. Welcome, Katon, Easy Mike. Thank you for joining us. So again, in these cases, we've got all the inverses, we've got the leverage long and the inverses in our ETFs Google sheet that we can take a look at. Again, ways to make money trading ETFs, and this screener is one of the ways we look for opportunities to long or short. Biotech, I skipped over a little bit. Again, just been very volatile, bouncing in that descending wedge. Again, gets pretty good support from that lower trend line, pretty stiff resistance from the upper trend line, and also from the 50-day moving average. Again, the leverage short on biotech in general is Lab D, long Lab U. Again, you can make money trading these oscillations using these leveraged ETFs. We'll take a quick look at the groups and the sectors and the industries. So we can see sectors, groups in FinViz, again, almost all red from Friday, very defensive, risk off, flight to safety move. So we had consumer defensives, healthcare and utilities at the top. Real estate, not too bad. The weakest, technology, industrials and materials and cyclicals, also pretty negative on energy. Week as a whole, again, pretty defensive. Healthcare and utilities, the only real positives. Energy pretty flat, real estate pretty flat. The weakest, industrial, cyclicals, and communication services. So we're getting close to the end of February. So for the month, see, very defensive. So again, even though the indices have been making all-time highs, very defensive bent to February. Again, we've been talking about the seasonality of February, seasonality for the winter, and we'll discuss that seasonality again. But again, we're seeing in the overall market that seasonality play out, even though the indices are making all-time, new 52-week new all-time highs. So again, industrials the weakest for the month, technology pretty negative, as well as cyclicals. Look at the industries, not a whole lot of positivity. Rebound in farm products, it's a little interesting. Quite a few utilities, again, very defensive move. Some REITs, most of the REITs slightly negative. Steel negative. Oil pretty negative, semiconductors pretty negative, coal negative, solar had a slight rebound and then very negative. Silver retrace. Aluminum, again, we've got tariffs slapped on aluminum and steel. Copper peaked out and rolled over. Want to quickly look at uranium. As we were talking, number of the uranium stocks rolling over, coming back down, recycling back down. Specifically, I looked at DNN, although they're currently losing money. Other popular ones, CCJ, see it broke down, headed down towards its lows. LEU, big pop on positive earnings, big correction, more downside. URLI, so again, we're watching this cycling back down in uranium, looking for opportunities, possibly URLI, maybe one of the ETFs, URA, URNM. So again, we've got several ETFs you can trade uranium long. So for the week, again, farm products positive, some REITs. So REITs perform not too bad. Silver pretty negative for the week. Gold, again, correction down from that 29.50. Copper, again, rolled over. Oil generally negative, again, significantly negative on uranium. Coke and coal, we've been talking about opportunities in that area. We'll also look at some coal ETFs as well. For the month, though, gold's been very strong, steel strong, silver pretty strong, REITs in general pretty strong. Some slightly negative, some REITs slightly negative, copper negative for the month. Uranium very negative for the month. Again, we saw that roll over. So again, waiting patiently for uranium to come back down and looking for opportunities there. Again, coke and coal we talked about. Also look at BTU, thermal coal opportunity with some future potential. Okay, let me grab a drink and we'll look at the economic data from last week and the economic data upcoming for next week. Just a quick reminder, as the important economic data comes out, important economic news, try to capture that in real time. Post that in the Surf the Markets channel in our Discord. Our Discord's free to join. You can find a free invite in the description box below. So again, great source of real-time economic data, real-time economic news. So you can see as the economic data comes out, I try to capture a screenshot, the raw data, post that in the Surf the Markets channel in our Discord. Also any important economic news. So again, our Discord's a great source for getting real-time economic data and economic news. We also have channels where you can discuss trading, all things trading of any type of asset class using any different trading style, trading platforms, etc. 24/7. So we'd love to have you join and actively participate in our Discord. Just very quickly, some highlights from the economic data from last week. And markets were closed on Monday for Washington's birthday or President's Day. So we hope you all had a great long weekend, enjoyed your day off. Not a whole lot of data Monday, Tuesday. Wednesday, we got weekly jobless claims data. Initial claims were up a little bit, higher than expectations. Continuing was slightly lower, but pretty much in line with expectations. 4-week average, a little down from last time. So right now, we're not seeing an increase in jobless claims from the layoffs, the government layoffs yet. But those are coming. I don't know what kind of severance package all of those are going to have, but eventually those federal employees that are being laid off will hit the jobless claims numbers. So expect those to increase going forward. Some of them probably not till October. I guess their package that they could take paid them through the government fiscal year. So not until October will we see that wave of people accepting packages hit jobless claims, but again, expected to go up, but stable for now. Friday again was options expiration day, and we got some S&P global data, manufacturing pretty much in line, services a little weak. We also got home sales again weak, down. So again, the whole housing sector, home builders, etc., pressured from high bond yields, high interest rates, also things like lumber tariffs, etc. So the whole housing industry is going to continue to be weak until something changes there. Then we got the Michigan consumer sentiment data, and this was pretty negative, probably a lot of the cause for the significant correction on Friday. 1-year inflation was unchanged, but it's still very high at 4.3. The 5-year inflation expectations went up to 3.5. Again, very negative. The consumer's expecting inflation to be high and sticky, much higher than the Fed's 2% goal. So this could again be very negative. It's an indication that inflation expectations may not be as anchored as the Fed had been stating. Also, overall sentiment negative, below expectations. So the consumer feeling less positive about the economy, worried about higher inflation for longer. So again, pretty negative, and probably a significant cause for the correction on Friday. So some of the highlights for next week is Wednesday after market closes NVIDIA earnings. So again, it's going to have significant impact on semiconductors, AI stocks, data center stocks, etc. So very significant market mover on Wednesday with the NVIDIA earnings. Again, they have a tendency to beat and raise. If they don't do that, if they're at all disappointing in the market's expectations, could be a very negative reaction from the market, particularly in the AI, semiconductor, data center, etc. related stocks. Again, the next FOMC meeting is not till March 18th and 19th. We'll get another dot plot, another SEP. So we'll see if they've changed their trajectory for rate cuts, or if there's even any possibility of a rate hike mid-March. So if we quickly look at the rest of the economic data from last week, and then the other economic data upcoming for the following week. Welcome, Aura Alpha. Thank you for joining us. Hope you had a great trading week and are doing well. Okay, let's zoom this up a little bit. So again, we've still got Fed officials talking. Here, their interpretation of some of the data. And housing week in general. Bond auctions, a little weak, not too bad. Mortgage rates still below 7%, down a little bit, not helping the housing market a whole lot because building permits, well, up a little bit from previous, up a little bit from expectations, starts a little below expectations, still negative. Crude oil stocks up more than expected. Again, we saw oil prices had popped up to about 72 and then dropped down back to 70 again. Talked about the weekly jobless data. Leading indicators negative. So again, another more concerns about the economy. Natural gas storage down more than expected. Again, natural gas prices trending upward, continuing to trend upward. Oil inventories up more than expected. Talked about S&P Global, existing homes, Michigan sentiment. Here's Baker Hughes. So oil rig count went up. Total rig count went up. So again, they're opening more rigs, probably trying to capture prices. So this is more supply, going to be more downward pressure again on oil. Look at next week. More bond auctions, more Fed officials talking, more housing data. More Fed officials, typical mortgage data, new home sales. So again, we'll see if the housing sector continues to deteriorate. Thursday, weekly jobless claims. And we get GDP, again, expected to be positive but decreasing from fourth quarter. Sales slightly down. We'll see again weekly jobless claims, pending home sales. Friday we get PCE. So last time Powell talked, he really focused on PCE. So this will be a lot of focus for the Fed's interest rate decisions. So PCE prices come out higher than expected. Higher inflation could decrease the probability that they're going to cut at all anytime soon. So again, probably the highest volatility data point for this week. Although spending will be interesting and consumption, we'll see if the consumer is slowing down. Other than NVIDIA, we still got plenty of other earnings. So you can see the whole earnings calendar So here's Berkshire reporting today, so you can hear how they perform, major component in the financial sector. So take a look at Berkshire's results, also what Buffett says about the outlook going forward. Got Zoom, some technology, etc. So again, I'd highly recommend you go through the earnings calendar and investing.com, see how these other earnings might impact your trading and impact any of your current positions, some airlines, etc., energy companies. Again, the big one's going to be NVIDIA on Wednesday, so a lot of positioning headed into that. Again, their propensity is to beat and raise. Probably be some run-ups in the AI stocks, semiconductors, etc., headed into the NVIDIA earnings. So again, you can see all the other companies in the calendar and investing.com. You can hear how we trade around earnings via the link to the video in the notes. Again, headline earnings important, but also their guidance, also their spending on AI is going to be a continued focus. So guidance and OPEX spending and forecast going forward, in addition to just their headline numbers. So welcome, Fairchild. Thank you for joining us. Hope you have a great trading week and are doing well. Let me grab a quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can still get 20 free fractional shares of stock by opening and funding your account with as little as $500. Each of these fractional shares of stock worth $3,000 to $3,000. If you'd use our affiliate link in the description box below, you can get all your free fractional shares of stock. Also take advantage of other promotions that they have at the time. Also, Webull now offers overnight trading 24 hours a day, 5 days a week. If you'd like to learn more about overnight trading in Webull, you can get more information via the link to our video in the notes and also our posting in the Discord via the link in the notes. We're looking at the market screen in the online browser version of Webull. So we can see from the distribution on Friday, significant number of decliners, about 3-to-1 decliners to advancers. Also, the size of the decline was significant. So we look at the net inflow, pretty steep outflow out of the NASDAQ. Again, a lot of profit taking out of the Mag 7, out of technology. So significant outflow out of the NASDAQ. Also, we had outflow out of the NYSE. So traditionally, typically, we see inflow in the NYSE on Friday, but this Friday saw an outflow. So again, more potential downside there. Fear gauge, though, how isn't in extreme fear. It's only down in the fear category, but it did drop down from neutral to fear. Previous week was 40. Now we're at 27. We're still not down, however, if we look back 3 months, still not down to that mid-January low. So, although again, a pretty steep decline in the fear index, did see a pop up in the VIX, as we'll see, but more potential fear to come. Again, you can see the near-term earnings calendar in Webull in the calendar widget. Go to next week. You can go day by day. So you can see who's upcoming earnings, what their expectation is, etc. Look at the best performing industries for the week. So beverages, Celsius had a recovery, Constellation, pharmaceuticals actually mostly negative, biotech mostly negative, utilities positive, oil and gas split, natural gas utilities slightly positive, multi-line utilities positive, and utilities, renewable energy mostly negative, REITs mostly negative. Also, if we look at the Treasury yield curve, we see that bends between 6 months and 1 year. And between the 6 months, it's the yields aren't matched for the 6 months till you get to 7 year. And again, we've got that slight inversion between the 20 and the 30s. Look at ETFs here. Again, here's a way to make money trading ETFs. Go look at the most popular ETFs in Webull. So we see short on small cap, short on the Russell, short on mid cap, short on the NASDAQ, Dow Jones down, short on mid caps. So a lot of focus on small and mid caps, stronger downside, down on the NASDAQ, up on the VIX, inverse of down on Bitcoin. So these are all ETFs. You can trade these various categories. Many of these we have in our ETFs Google sheet, as we'll see. So again, short the Russell, short small caps. Industrials very negative. Almost everything except in utilities, slightly positive, and defensive. Again, very defensive, risk off day on Friday. Commodity wise, that's carbon, natural gas, zero coupons, 25 years, so long end of the curve. We also look at futures. Again, you can also trade futures now in Webull. Actually, I just opened my futures account. I haven't used it yet, but it's a very easy process to open to your futures account. Their funding requirements are very low, so you can get more information on trading futures in Webull via the link to our posting in our Discord. You see all the major indices, significant correction on Friday, but a lot of downside down to even the previous low in early February. Also, we see these multiple tops in all the indices. Also, when they rolled over in the past, we had pretty significant corrections. So each time we had a pretty significant correction. The previous one with a notable capitulation and rebound, and then back up to a new all-time high again. So again, each time these roll over, we get continued downside. So in my humble opinion, again, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. But again, in my humble opinion, each time these roll over, we need to see a capitulation at the bottom. So in my humble opinion, I think we've got significant more downside to come. And the Russell's getting close to its previous bottom. European markets have been very strong. So Euro stocks, did look like they topped out and consolidating slightly, may swing back up again. Again, we have ETFs in our ETF Google sheet. You can trade Euro stocks long or short. I only have a long for the DAX. We have long and shorts on all the major indices, also the Nikkei. We have some, I believe that we have long and short. See it rolled over on strength in the yen that we'll see. And we see oil peaked out about 72, back down to that 70 support level. We'll see if that holds again. If so, probably get a slight rebound, but you see it's making lower highs. At 70 is pretty strong support. If that breaks down, we'll be looking for capitulation dip in oil, and we'll go long using the USOI ETF, monthly dividend paying ETF on oil. See that pop up on the VIX, got them just in the 18s. The futures got in the 18s on Friday, but not a severe pop. So we'll look at the VIX term structure real quickly. So quick reminder, you can find the VIX term structure tool as well as many other tools, resources in the link section on our homepage, beachbumtrading.com. Without the U, so if we go down to reference links, we can see the VIX term structure. See the VIX, even though it's sitting about still below 16, so the current VIX is still significantly below the futures, so a lot of potential upside in the VIX. So you can see now in the futures 18, 19, and even 20 going out into October. So that VIX term structure has moved up significantly. But again, the current VIX still significantly below the VIX future, so still relatively cheap. We look at today, previous, and the term structure. So again, did have a pop up on Friday, but again, still significantly below futures. So I hope that all helps. And again, we have a number of ETFs that you can trade the VIX, both long and short, in our ETFs Google sheet. Talked about this upward trend in natural gas. So you can see it about tested 450, consolidating somewhat. So we'll see if it breaks back above 450. Again, a lot of volatility, but congratulations to any of our BeachBum traders who caught this strong swing up in natural gas, like using the leveraged long, the ETF Boyle, or the unleveraged UNG, UNL. Again, you can find all those in our ETFs Google sheet. Again, gold testing that resistance at 29.50, consolidating right at that resistance level. If that breaks resistance, probably go test 3,000. Got plenty of support at 2,900. So again, each time we see it consolidate at these resistance points, we see a pretty strong breakout. So if you watch for that, again, we've got ETFs, leverage ETFs. You can make good money trading gold long or short. Silver did correct. Looks like it tested 33, corrected back down. Pretty good support at 32. Long-term upward trend also in silver. We've got ETFs you can trade long silver AGQ or short ZSL. See copper rolled over. We'll talk about some new copper ETFs that we've got. Platinum and palladium rolled over. Cattle trending back down. Corn looks like it gapped up on a futures rollover. Probably come down, fill that gap, but strong upward trend. Oats oscillating up and down. Rice similarly, but headed down. Wheat looks like it tested that 620 resistance level, corrected off of that, but again, a strong upward trend. You can trade wheat long with the WEAT ETF. So again, congratulations to any of our BeachBum traders who caught that swing up in wheat using the WEAT ETF that we mentioned frequently. Orange juice, this is interesting. It looks like it's very low. It's one of the reasons I was open my futures account. Is there's some opportunities that we don't have ETFs directly related to. Orange juice is one. So maybe some, although again, it looks low, but it's still relatively high if you zoom out. So these might be some that we trade directly with futures in the future. Coffee finally rolled over. Yeah, we saw bond yields retrace and bond prices pop back up, getting close to their previous high. If they break that previous February high, plenty of potential upside in bonds. So again, we've got ETFs to long or short, the various durations of bonds that you can find in our ETFs Google sheet. So again, probably go retest these previous highs and all the different durations. Those break, again, plenty of upside in bond prices, so downside in bond yields. So the dollar's broken down below 107, so consolidating 106.5 or so. Got plenty of support at 106. Saw the yen break back up, so it's testing its previous high. Again, we've got some ETFs. You can long or short the yen in our ETFs Google sheet. YCL is the leveraged long. I think YCS is the leveraged short. So we'll see if we get a slight correction or if this breaks out. Again, this could trigger a reoccurrence of the yen carry trade. You see it's about as high as it was right after the previous unravel of the yen carry trade. So this could also create some significant volatility and downside in the markets. So again, took some time for this yen to recover, even though the BOJ had already raised rates again. We didn't get an immediate unravel of that yen carry trade. So maybe that's what's part of what's going on. Maybe also part of the sell-off in like the Mag 7s, etc. So again, all the other foreign currencies rebounded slightly on that weakness of the dollar. We also have ETFs in our ETF Google sheet and the ETF database sheet where you can trade the various foreign currencies. So hopefully I'll have time to maybe highlight some of those. But again, you can trade all these foreign currencies with ETFs, and you can find those in our ETFs Google sheet as well. Okay, let me grab a drink and then we're going to focus on our theme for this week, which is making money trading ETFs. And to discuss that further, we're going to jump to our ETFs Google sheet. So when we identify opportunities, trade ideas, trade strategies, we then use our ETFs Google sheet to find an ETF to trade that trade idea, be it a long or a short. And you can do likewise, get 24/7 access to our ETFs Google sheet, help you make money trading ETFs by joining our Patreon. Find links to our Patreon in the notes and in the description box below. So again, let me grab a quick drink and we'll talk about some additions, recent additions to our ETFs Google sheet. And then we can look at any other categories that anyone in the chat would like to look at. And again, hopefully help you make money trading ETFs. Okay, again, our theme for this week is to make money trading ETFs. And again, we use our ETFs Google sheet, which we can trade, identify, find ETFs to trade our long or short trade idea, be it on an index, commodity, topic, a theme, etc. Again, you can get access to our ETFs Google Sheet by joining our Patreon. Made a number of additions in the past couple weeks to our ETFs Google Sheet. And one of the reasons I wanted to focus on that for this week. So we'll see how many of these new ones we can get through this week, and we can continue in the future if necessary, or tomorrow. So the first one, I'm going to focus on the ones I added this week, and then I've got the ones that we added last week, carried over from the notes for last week. So the first one I want to look at is a new one on copper. It's a leverage long on copper. We saw copper had made a significant run up recently. We do have the more unleveraged ETFs on copper in our ETFs Google Sheet, but now we've got a leveraged one. So those of you that like leverage or nimble can take advantage of that. We've got this new leverage long CPXR on copper, 2x leverage long on copper. So we'll look at that one. So again, you can quickly find any ETF in our ETFs Google Sheet, do a quick find on the main sheet or the research sheet. You can see we've got several others in our research sheet as well. So here's CPXR, 2x leverage long on copper. So you can see its risk reward profile, 1.27. As we'll see, it's relatively new. So we'll look at its profile in FinViz. Okay, so here's this CPXR, Daily Target 2X Copper Index. You can see it's brand new, so we don't have a lot of history. See, it's got a pretty choppy, but it did have a significant pop and then a roll over when copper rolled over. See, the AUM is very small. Again, this is very new. Volume's very small, so again, very choppy. That's why we put it in our research sheet. We'd love to get more history on it. Expense ratio is a bit high. It is not optionable. See, it's based on copper futures. So you can see July, May, September, March, micro copper. So again, this is based on copper futures. So a way to trade copper futures with an ETF. Again, the price is going to be driven by those futures. So you want to watch those futures. Seeks to achieve cash settled copper futures contracts. So again, this is based on the copper futures. Again, you can compare this one to, we've got one on copper miners, COPJ, COPP. Looks like they have slightly better risk rewards, but again, we don't have a whole lot of history on CPXR yet. Also, if you look in our main sheet on copper, we've got COPX. So again, that's our main go-to in the past. Got 1.49. So we'll see how this CPXR performs over time. But again, if you're looking for a leverage long on copper, you can take a look at CPXR. So I hope that helps. Next, we've got a single stock leverage long on Intel that the Crow mentioned in the chat last week's part 2. So thank you again to Crow for pointing out INTW to us. So again, this is a leverage long on Intel. So we'll take a look at that one. Again, we've got a variety of single stock ETFs as well, long, short, some leveraged. So here's INTW, again, 2x leverage long on Intel. So if you want to trade Intel long with some leverage, see its risk reward profile. Again, this is going to be relatively new, so we probably don't have a whole lot of history. So again, very new. Intel had a pop-up on potential takeover breakup news, retrace significantly. See, this one's not optionable either. Expense ratio is a little high, 1.15. AUM, it is picking up some interest, so 12 million AUM. Got better volume, 375K. So again, this one looks like it's getting some interest, only leverage long I know of on Intel. You see it's based on Intel, leverage long. So again, if you're looking for an ETF to trade Intel long with some leverage, check out this INTW. And again, you can watch the risk reward profiles for INTW in our ETF Google Sheet. So thank you again, The Crow, for sharing that one with us. Next, Easy Mike Katon mentioned this emerging market ex-China ETF. So this is the iShares MSCI Emerging Markets ex-China. So EMXC. So we'll take a quick look at that one. Again, we've got a variety of emerging markets ETFs. Thank you again, Katon, Easy Mike, for sharing EMXC with us. So here's EMXC. Again, we've got a variety of emerging markets in our main sheet and in our research sheet. See, here's some other emerging markets. We've got both longs and shorts. We can compare all of those. Again, this is an emerging markets ex-China, so it excludes China. See, it's got a current risk reward, it's pretty good, 2.4. 1.16 from support to resistance, or 52-week, long-term over 2, so that looks pretty good. Not too high off its 52-week low, so a little bit of a dip might be attractive. Got some upside. Let's look at his composition. So we can see it bounced off that support level. It's got a multiple bottom, so that might be a good buy point. Did bounce up. Looks like it might be rolling over slightly. A slight breakout. So got support from its 50-week or 50-day. Resistance from the 200-day. A lot of AUM, so almost 16 billion in AUM, so very popular ETF. Plenty of liquidity, average volume 2 million. Expense is very low, 0.25. It is optionable. So this is not leveraged. So if we look at the composition, it's pretty diversified. Again, this is focusing on emerging markets with the exclusion of China. So if you'd like to get long on emerging markets, stay away from China. This EMXC might be of interest. So you see it's TSM, Taiwan Semi, Samsung, INX, Reliance, Infosys, so that's India, I believe. Again, MSCI emerging markets with the exclusion of China. '23 of the 24 emerging markets, excluding China. So again, broad composition across emerging markets with the exclusion of China. Again, if you'd like to get more information about any of the composition of these ETFs, also got links to their ETF database profile. You can click on those links in our ETFs Google Sheet as well. Go to their holdings. Again, you get more information about them in their overview. Go to their holdings, get more details about their. So here's Saudi Aramco, so Saudi Arabia, some other banks. So again, you can get more information about the holdings for a particular ETF via the link to the ETF database profile in the column in our ETFs Google Sheet. So again, got a variety of emerging markets ETFs, and you can look at the ETF, the risk reward profiles, pick the one that has the composition and the risk reward profile that you prefer. You see, we've also got a short, if you want to short emerging markets, EDZ. See, it's got a pretty attractive risk reward profile as well. Lastly, the last edition from this week is there's been discussion about a variety of countries that may benefit from tariffs, particularly on China. Where might people move their manufacturing to China? And we've got a number of ETFs we've talked about in our Making Money Trading Tariffs discussion recently, on like Indonesia, Malaysia, Vietnam, India, etc., Mexico, Brazil. One we didn't have that was discussed was Singapore. So I found an ETF on Singapore, so long Singapore, EWS. So another country that may benefit from tariffs on China, people moving manufacturing or other business to other countries. So I added this EWS to our research sheet. We can take a look at that. So we can also trade Singapore. Again, you can find all of these others, France, Canada, Germany. There's the one long on the DAX, India, Indonesia, etc., Malaysia. Here's Argentina, had a recent run up as well. So again, you can find ETFs on any country that you think might have a good trade idea in our ETFs Google Sheet. South Korea had a nice run up. Congratulations, I believe the Crow benefited from this run up in South Korea using KORU. Leverage long on South Korea we've discussed. So again, here's EWS on Singapore. Not a whole lot of near-term risk reward, 1.3, 1.35. Long-term about almost 1.2. Okay, that's composition. So again, we see it's had a nice run up. So longer term, let's see if there's still some potential upside. Yep, still some potential longer term upside, and looks like it just broke out of its 200-day moving average, so it's got some potential upside. So if you think this trend will continue, might be interested in EWS to trade Singapore. Pretty good AUM, 763 million. Volume not too bad, 534K. This one is optionable. Okay, this composition, DBS. Not familiar with them. C, that's one that's relatively popular. Banks, looks like it's somewhat heavy in banks. And also C, okay, so it's almost 50% in finance, so heavy in finance. So be aware of the sector composition as well. And you can see again the pie chart in the profile in FinViz. Some airlines. So the MSCI Singapore 2550 index, large capitalization of equity markets in Singapore. So again, if you think this one will continue to trend up, possibly benefit from tariffs, if you think Singapore may be one of the countries that'll benefit from tariffs, you might take a look at EWS as a potential ETF to make money trading Singapore with ETFs. Cindy Osborne's asking about Indonesia. Again, you can find the ETFs that we have for Indonesia. Again, there's Japan, so you can see some of the Japan ETFs. Here's the one on Indonesia, IDX. Again, you can access their profiles via the link in the FinViz URL. So Indonesia's pretty down quite a bit. So if you think Indonesia is going to benefit from tariffs, the trade war, it's been declining. So you think that's going to rebound, swing back up? Got a decent upside as well. Again, you can watch these in our ETFs Google sheet. Again, we've got Malaysia, South Korea, Japan, etc. So you can do a find on any of these different countries in our ETFs Google sheet. Also, just very quickly, in our main sheet, again, we've got all the longs and shorts for the various technology components. So we talked about ARK on ARK-K, leverage longs on biotech, LabU, LabD, got some on Bitcoin, a variety on Bitcoin, Bitcoin futures, etc. Here's Brazil, long or short on Brazil, got some longs on cannabis, etc., various commodities. China had a recent run back up on yen. Talk about yen a little bit again tomorrow. That's leverage long. Leverage short on China is Yang. Unleveraged K-Web, C-Web, and we've got some others as well. Also, we were talking about coal. I was looking at BTU, trying to keep an eye on that. We've been watching MET-C, which is a coking coal rare earth play. We'll talk about that again tomorrow. Again, emerging markets, energy, gold, again, a variety of longs and shorts on gold, silver, etc. Natural gas, Mexico we've been discussing. So again, different countries, different commodities, technology components, single stocks, long and short, some leverage, some not. So again, if you're looking for a short to trade in like a retirement account, you can find single stock ETFs. Again, one of the ways to make money trading ETFs. You could short even individual stocks using an ETF. Semiconductors, again, focus on NVIDIA earnings. We've got several longs and shorts on semiconductors. Shipping, we've been talking about. Silver, again, long AGQ, short CSL, dividend payer, SOVO, etc. Uranium, again, we saw uranium cycling back down, so we're watching URA. There's also a leverage long on uranium in our research sheet, URAX. So again, check both our main sheet and our research sheet for any topic. Also got uranium and nuclear, etc. So here's a leverage long, URAX on uranium. Utilities long or short. So we saw that rebound in utilities, volatility, get a variety long and short on volatility. Talked about wheat, WEAT on wheat. Also that yen pop up, so long YCL or FXY. If you think it's topped out and you want to short the yen, YCS is an ETF, you can short the yen. So kind of run out of time. You can see the others that we've added, and we'll try to work more off that list as we go forward, maybe tomorrow, maybe over the next coming weeks. But you can see, find all these in the research sheet of our ETFs Google sheet. So again, we've got long and shorts on Coinbase. I've got some new ones on gold. You can take a look at. We've got long and short on Meta, long and short on Netflix, and a new, very new long on Robinhood. And a number of these were mentioned and provided by the Crow. Thank you again, the Crow, for sharing all these new ETFs with us. And again, you can take a look at all of those in the research sheet of our ETFs Google sheet. So again, all kinds of different ways that you can make money trading ETFs, and use our ETF Google sheet to help you make money trading ETFs. If I missed your question or comment, I apologize. Please put them in the comments to any of our videos or on our Discord. Please tag us in our Discord for BeachBum Trading, all lowercase, no other character symbols, etc. Anyone else is an imposter, please ignore and report them. Again, we'd love to have you join and actively participate in our Discord. We talked about, February. You could hear how February typically performs, how the winter typically performs. In February, year term, slightly positive, but longer term, February can be negative. Market tends to bottom in mid-March and then rebound. So again, in my humble opinion, I think we've got more potential downside to hit a bottom, and then we'll rebound back into the spring. So we'll look more at that seasonality in March as well, but I would highly recommend you view these videos as well and be aware of the seasonality trends, sectors, industries, etc. And again, we're seeing strong sector rotation out of technology into defensive sectors. And again, you can find ETFs to make money trading ETFs using any of those trade ideas. So again, if I missed your question or comment, or you'd like us to look at other ETFs for the future, please put those in the comments to this video or in our Discord. Also, we'd love your feedback on what we can do to continue to improve our weekly trading game plans, any of our other videos, our Google Sheets, etc., our community. We really need your feedback. Also, we hope you like this content. Please smash the like button on our videos. Help us try to get the YouTube algorithm to show us some love and share our content with more traders around the world. Also, we really need your help to directly share our content with your fellow traders. Invite them to come join us in the live chat, join us in the Discord, help to continue to build, grow our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So thank you again to everyone that participated in the chat today, everyone that's watching after the fact. Hope you'll come back tomorrow, 10 a.m. on Sundays for part 2 of our weekly trading game plan for this trading week, where we'll take all these trade ideas and we'll select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also talk about how we use dividend payers and several option strategies to make money trading. So again, we hope to see you all back 10 a.m. on Sundays for part 2 of our weekly trading game plan. Thank you again and have a great day.